Ben, I don't know if we can hear your audio.
It would help, I guess, if I cut my mic on, right? All right.
Ah,
Hey, you got me now, okay?
I think it's good. Let's have everyone tell us. Give us a yes in the questions to say, yes, I can hear the audio.
All right, so Gene, since you're on, why don't you, any announcements or anything you need to tell the group?
Well, of course, welcome everybody. Hope you're all having a great new year. And we'd love for you to join us. Hey there, Cleo. We'd love for you to join us for Stock Analysis Fridays. And that's every single Friday at 8 a.m. Pacific time. And I think that's about it. Back to you, Ben.
All right, thank you. You know, Gene, we're gonna have to get you now to use your cam. I know you got one, so next time.
I know. Next time. Okay, for
All
sure.
right, good. Everybody wants to see what you look like, right? All right, so hope everybody's doing good. Today is January 17th, 2024. My name, of course, is Ben McDowell with traderscoach.com. That was Jean McDowell, my wife, who just came on, and together we run traderscoach.com. She handles all the customer support, admin issues, and I handle all the trading issues, including the software. All right, so if you have any questions for us this week, you know, we hold these every week, and the purpose really is for us to touch base once a week. And if you're using our software or you're enrolled in any of our online courses and you have questions, bring it here. You know, I'm the one that designed all this stuff, so I can answer all the questions that you have on that. And it's kind of a unique opportunity for you guys to be here because of the fact that it's weekly. And so if anything comes up, you know, it's part of our support when you buy software or courses for you to be able to come here and get any questions you have answered. So I think that's kind of cool. And I don't know too many other places that offer that type of support. So we welcome you here, and we really welcome the questions that you have, of course. All right, let me go through some of the administrational items I have to do when I do a webinar like this. And first thing, of course, is talk about the risk. Like I always say, without that risk, there is no opportunity. So the two go hand in hand. But you need to be aware of the risks. And the two major risks you should focus on right away is something called market risk and trade risk. And with market risk, how you can protect yourself against that is basically just to fund your trading account with money you can afford to risk, called risk capital. When it comes to trade risk, this is the risk you want to take on each individual trade. And we, of course, use position sizing in order to do that and basically take into account where we're going to place our stop in accordance with also our risk to reward situation. So that's kind of important too. And if you need any help with that, I'll show you some books where I can guide you to that. If you're watching the recording, welcome as well. You know, we post all the recordings here on our YouTube channel, and they're in the unlisted area. So if you go to the YouTube channel, you won't find it, but you have to have a link to access it. And that link is located in the VIP client support area. So go there and you can get the link to access all the previous client support. And then what we try to do is under the header, we try to kind of give a little indication of what we talked about that week so you can thumb through those and pick out the ones you want to look at. All right, and then finally, you know, in trading the markets, we deal in a realm of probabilities, not certainties. So even with an edge, we're going to be wrong sometimes. So you do have to use risk control at all times on every single trade. Also, too, run any of the information past your financial advisor just to be sure what we talk about or recommend is suitable for you. All right, books available on Amazon. Okay, we have an Amazon page for these. I'm working on my newest book called The Art of Trading, and this book is coming out in this year. I think it's going to be the best book I've written to date. I'm putting a lot of material out. We were going to have it out last year, but I said I wanted to add a few more chapters and beef it up a little bit with some new material for the markets today. And so that is coming out in 2024 and will be very comprehensive. All right, Money Management for Traders, Traders Money Management System are the two books on money management. Elliott Wave Techniques is available for you. That's a form of technical analysis I use for indicating cycles in the market. And Survival Guide for Traders is basically how to run your trading business with today's technology, just like a professional hedge fund right from your home. So you can check out those. All right, software. Many of you have purchased the software. Just a little overview. Okay, so our software works on the following platforms. It works on eSignal. It works on TradeStation. It works on MT4 and MT5, NinjaTrader, and MultiCharts. So there's a lot of other platforms out there, but we don't have a lot of people using those that we know of. So we kind of try to stick with the platforms that are most often used and are the best at keeping their platforms up to date. You don't want to be stuck in a platform that basically doesn't upgrade itself for the latest technologies. And we upgrade our software when necessary as well. So that's kind of really important. You know, I came across somebody that was using an indicator from a third-party vendor like us, and they hadn't updated it in 8 years, and they couldn't understand why it didn't work. So updating software, keeping it current is really important, and that's why if you update to something and you have trouble, let the vendor know so they know that there's a problem with it. We're pretty active here. I use the software every day, so I kind of know what works and what doesn't. But always remind us in case you come across something new that we haven't caught yet. All right, so we have software that works on charts. We have software that scans for the market, and we also have risk control software as well. So all that's available. You can buy it as a bundle, a la carte. Some people buy the art software. 6 months later, they buy the OWL, PTF, or TLM, or so forth, that type of thing. All right, so what do you want to talk about today? I've got TradeStation up and running. How many people out there are using TradeStation? How many people out there are using TradeStation? Let me know. And how many people, well, just tell me your platform. That might be the easiest way to ask that question. All right, so we got a number of people using Ninja. We got a few people using TradeStation too. Okay, pretty much 50-50. How are the platforms working for you guys? And as far as NinjaTrader, how many people have basically using the brand new version that requires you to log in to use the platform? How many people are using that? All right, Art's saying the TradeStation platform is working excellent. Good to hear. All right, Brian, who is using TradeStation, says he's run out of memory with 4 desktops. How much memory you got, Brian? Just out of curiosity. You know, the platforms that are taking more and more memory these days. Oh, you shouldn't be running out of anything. It's 64G. You should be able to have tons of charts open. So have you updated all the Windows updates? You know, that's an interesting thing because, you know, a lot of times, you know, we have a software engineer that goes onto people's computers and installs software and so forth. And a lot of times, you know, Gene will ask before the appointment, you know, did you update your platform? And everybody always says yes. And then Mark gets on there and he says that, you know, a majority of them never really fully updated their Windows. And the usual answer is they think it's done automatically. Some are, but most of the comprehensive updates they do are manual. So you definitely got to go in and check that. You just go in through your settings, software update, okay? All right, so you're losing 64G. So you have 64G across all 4. In other words, each desktop has 64G. All right. I mean, you should be okay with that. 50 strategies may be a bit, but you can open up your performance or task manager, I think, and see what the CPU and the memory is running. Are you working on a network? Do you have them networked? Yeah, exactly, Lewis. That's what I was getting. Is he using one drive? Yeah, that's the problem, I think. So he's using that in a data center, running it out of a data center. So one program, 4 desktops. That's probably it. Yeah, so it sounds like some type of hardware, you're reaching the hardware limits on however your setup is. All right, Ninja Trader. Lewis, glad you're here. You were using Ninja Trader and you had a issue with the free data, if I recall. Is that correct? Okay, so you had a workaround on that. And apparently on the new Ninja Trader platform where you have to log in with the username and password, there's a few steps you have to do. Lewis, is there a website or a set of instructions online that tell you how to do that? Because I still use the legacy version, so I don't have that newer version installed purposely because I didn't want to do that. You know what would be really great, Lewis? If you want to, you could post on the TC forum the workaround on that, or you can email it to me and I'll post it for you. Okay, and just send it to my address here at bennett@traderscoach.com, and I will post that because I think that would be helpful for other people to know. I know you told me a little bit about it. You have to go to simulator instead of live, tools, and then options, but give me the exact steps in writing so I don't goof it up. And I will put that in the TC forum to help others that are encountering that same problem. I think that would be really great. And that's the purpose of the forum, is to kind of put information like that in there. Very interesting. I appreciate that. Thank you so much. Everybody thank Lewis for that. I'll make sure you get credit for that, Lewis. All right, so anything else? Anything else on anybody's mind as we go into the new year here? Overall, I think the markets are probably due for some profit taking. We may be seeing that now. I don't think it's anything major, but I just think it's a pullback. And if you just did a webinar for our yummy folks that will be posted on YouTube later today on what I think the market's going to do. So you may want to check that out. It's under market review and it will be on our YouTube page. So that's free and you can join that. All right, so anybody else? Any issues with the trade size calculator or the risk to reward calculator? Anything there? Anybody want to do an example with those, with the risk to reward, how to use it? Does everybody know how to use it? I use it when day trading and I use it with position trading too. So you can use it on futures or any of the stock markets. So you're pretty good there, okay? How about Elliott wave? Are you okay on Elliott wave? Drawing fibs, picking targets, any of that information? Would you like me to cover any of that? All right, if you're using Ninja Trader, any problems on that? Elliott sounds good. Okay, we'll work on, if you'd like to see Elliott, we'll do Elliott a little bit. That sounds good. All right, so on Elliott, I'm going to bring up a whiteboard here at first and get that going. So give me 1 second on that. All right, so let me move this off to the side here. And we'll bring that up here. Okay, So the premise of Elliott, and then we'll take a look at it on some of those markets there. Okay, good. So the premise on Elliott is that there are 5 waves in a trend, whether it's bullish or not. Okay, so bullish or not. So that's the first general aspect of the Elliott wave you need to be familiar with. So when we look at a trend, you know, they don't go straight up, right? Instead, they zigzag, don't they? Well, what Ralph Nelson Elliott noticed is during a significant trend, there are 5 zigzags that usually occur in them. And that led him to write a significant book on the Elliott wave back in the like 1930s, 40s. So this is something that was noticed a long time ago, not recent. Now, with the advent of computers and indicators, we've been able to combine Elliott's work, which I call the classical Elliott work, with the modern. And when I say modern, it's things like adding the optimum wave locator, which is our OWL indicator, which measures momentum in order to help us count the Elliott waves. Because certain big moves in the Elliott wave have the highest OWL indicators. So that kind of helps us clue in to what the wave count is based on that information. So let me just erase this here for a second. Okay, and go in and start an Elliott wave to the upside. So when your first move up off a bottom, and bottoms take the form of different shapes, that first move up, obviously, he labels as 1. The second move down is labeled as a 2. And notice I bring that 2 almost all the way to the starting point of the beginning of wave 1. And the situation is that wave 2 is a very unique type of corrective wave, in that it is not like wave 4. Wave 2 can retrace 100%, doesn't have to, but it can, 100% of the first move from the starting point up to the top of wave 1. That's one of the unique aspects that make wave 2 a lot different than wave 4. So that's very important to note. Then after wave 2, you have the next and most powerful move in the Elliott wave called a wave 3. And obviously, all right, you're not going to really know that wave 2 is over until you get above wave 1. Okay, so that is usually an indication that you have begun wave 3. Now, there's a lot of things you can do before you see the starting point, which is here, to determine the probabilities of, is that a wave 1 or is it a false breakout, and so forth. And that usually depends on the history preceding the 0 line. So if you've had 5 waves down before here and then get a move up here that takes out some of the pullbacks on the wave down, then that increases the probabilities that that isn't a false breakout, that it is exactly a wave 1, okay? But if it's a messy bottom that's been going on like this for some time, then you might be better off waiting for wave 2 to end and then getting above wave 1, because at that particular point you have higher highs and higher lows, so you have a definitive confirmation of a move to the upside by definition of a trend to the upside. And that would most likely be wave 3. Now, getting to the OWL, which is another part of Alexander's question here, is that the OWL will start to surge on a bullish wave 3 dramatically to the upside, okay? Because wave 3, being the most powerful of all the waves, is going to have the highest momentum and the highest volume. I measure momentum. As long as I got momentum there, it's as good as having volume, so I don't need both. But the idea is that the momentum will be the highest along with volume during wave 3. And it will be the most hyperbolic move. In other words, the slope of wave 3 is usually unmistakable. It's huge, okay? And it's much larger than wave 1, and it is much more powerful. And then after wave 3 ends, you have wave 4. Now, wave 4, unlike wave 2, does not retrace 100% from the start of 2 or the start of wave 3 at the bottom of 2 to 3. It usually retraces about 38 to 61%, which is a fib number, right? So I always draw my fibs based on the 38 to 61% target for wave 4. So somewhere in this area here, wave 4 should end. Okay? Now sometimes the probability of that is about 70%, but sometimes you get a shallow 4, 15% of the time, and sometimes you get a deeper 4. And let me explain some of the situations associated with that. So if you have a really super strong move up on this time frame, and if you look at the higher time frame, let's say this was the daily, and you go to the weekly, and you see an extremely bullish owl still existing on a weekly time frame, then you may get a shallow pullback into the 15% area, okay? So you may want to, if you see a turnaround here, you may want to go ahead and go in, but you need to put your stop, if you want to put it right under the bottom here, put your stop there, get out in case you're stopped out, and then try again if it goes into the wave 4 target zone. All right, but 15% of the time on a strong move up, you only get 15% of the time a pullback to that area, which is about 23% to 38%. So this little area in here, okay? So, it's basically you've got to make a determination on whether you want to go into that low probability area based on the higher time frame, is what I'm saying. If it's extremely strong, it may warrant a small entry at that point to see if that's all the retracement you're going to get. But most of the time, it goes in between 38 to 61%. Now, the interesting thing is, if it only goes to 15%, well, that means when you draw your fib extensions, wave 5 is going to be higher than if it went or retraced lower than that. Okay, by the very nature that you anchor your wave, your extensions off 2, 3, and 4, right? So if you have a shallow 4, that's going to cause a higher target zone for wave 5 based on fib extensions. Likewise, if you have a deeper wave 4 down into the lower 15% area down here, then that means your wave 5 isn't going to be as high as if it ended in a much quicker fashion in the higher probability or less zone. Okay, that makes sense, right? Because that's how you draw the fibs. So the other interesting thing is, even though wave 3 has the highest owl, wave 4 has got to have a negative owl. It's got to be red. It's got to go red to confirm a major 4. So if you have what I call like a little hook in here, but this does not go red, then that's wave 3 still. Okay, and and you see that a lot. Okay, so you have to have a red owl for it to be a major wave 4. Otherwise, you may only see a slight pullback, not retracing to the fib numbers, and we call that a hook, one last hook, which is really the waves inside wave 3. So you're looking at wave 5 on that last hook inside wave 3, because there's waves inside waves. Okay, so that's how that kind of works. And then wave 5 has got to have, once again, a green owl down here, and you have to have bearish divergence in a bullish trend between wave 3 and wave 5. All right, so any questions on that? Any questions on that? So that's, and it's the exact same for a bearish trend, okay? The only difference is you're going to see it reversed. So on a bearish trend, the 0 is here. You have 1 here. Then you have your 2, right? Possibly 100% retracement, and also a double top. And when it happens on an uptrend, it's double bottom. All right, then you have 3. Then you have your 4. Okay, and then your 5. Same thing, just inverted. Okay, so same theory, same everything. All right, so any questions on that? All right, would a change to a yellow count as a change? I think what you're talking about, is that the PTF being yellow? Okay, so the PTF really has nothing to do with the Elliott wave count, but the owl does, okay? Now, the PTF, if you are in, let's say, a wave 5, and you're wondering, you get a little bit of a pullback, and you're wondering if 5 is over, and you have a green PTF, then chances are wave 5 is not over. Okay, you're probably going to go up one more time. So that's where the PTF can help you determine at certain points if a market has topped or not. Now, the thing about the PTF is that, you know, it doesn't tell you when the market will return to make another high. It doesn't tell you how much profit taking could occur before it returns and makes another high in this example. But it's a 75% probability when you see a green PTF that you will make another high above the highest high in the green PTF area. So you're not wrong in incorporating this in with the thought process at times of determining if wave 5 is over for sure. You're absolutely right on that. But you know, the PTF is also used on a whole variety. You can even have a zigzagging market with no Elliott wave apparent. And if you have a green PTF sitting here, you definitely have a 75% chance also of just going above this, not even knowing exactly what the Elliott wave count is. So it's kind of an independent indicator, whereas the owl, we actually use in helping us count the Elliott waves. And at times, even if you don't know what the wave count is, you can almost count it based off the owl. As soon as you see because the owl will have either, will indicate wave 3 by either a pink dot on TradeStation or text on Ninja or eSignal that tells you wave 3, okay? And then that can also help. And then when it goes red, you know it's 4. And then when it goes green again, it can be 5. All right, but you have to verify that with the price activity on the chart as well. Great question, okay? All right, so I guess the answer to your question is if you have a dot on the owl, but the PTF is still green, all right, you may get another high, but it's also possible because you could have a 3 and a green PTF the entire time wave 4 is. So, and then it takes off and then it turns yellow here, okay? So if the pullback here isn't enough to change it from green to red, then it may remain green during the entire wave 4 pullback. So that's an exception that can happen because with the PTF, we don't know how much profit taking is going to occur before the market returns and makes another high. Okay. So that's why I'm saying it's kind of if for Elliott wave count, you're probably better off using the owl. Okay. All right. So for fun, let's take a look at the symbol you want to take a look at here. Okay, and that is, what is it? It is RIVN. All right, so I've got 3 time frames here. Okay, I've got a long-term time frame and a short-term. So the long-term time frame is useless. Okay, and the reason it's useless is because this has only started 2 years ago, okay? So you need more history to really get any analysis on a stock like this on the weekly time frame. Yeah, it's down, it's bottoming. Certainly a very large indicator based on the history we have. But, you know, other than that, we don't have a lot of history to base a really accurate Elliott wave count on. If anything, what you could do with this, if this is a 3 and now we have a little bit of green showing up, if you wanted to draw a fib retracement, you could put that in and say, okay, if this count based on limited history is right, then 4 should go into this target zone here. And notice this isn't going to be a 4 because it never went green. Okay, so on a downtrend, you have to have a green owl at least. And it can go green, red, green, because A, B, C type of thing. But again, I'd rather go to the shorter time frames because that's going to have more price bars per history than the long term. So if we look at that, let's see if that helps us a little bit, not much though, okay? So, and again, you really haven't broken out of this channel, which is right here yet. Okay, so you really don't want to be doing much with this at this point, especially with a red owl. And maybe the 60-minute can help us most of all. And at this particular case here, notice you had the big retracement up here. So it looks maybe at this particular point that we've had 5 waves down here. Okay, so after that, we're getting the move up, all right, representing maybe an A wave, okay, B wave, maybe C wave will come, who knows, okay? It's not that great, okay? So this is one in terms of the Elliott wave that it's too much of a head scratcher, so I would pass, okay? So Arturo, what you want to do is if you get something like that that doesn't make sense, okay, just pass on the stock, pass. If you compare that to like GBTC, all right, where you can see a big impulsive wave up here now, okay, then you got a wave 3 and look at the hyperbolic move here, okay? So for trading the daily chart, you can certainly see if we pull back and this goes red, then we have a 4 and then 5. Now, what's interesting about this is look how powerful that owl is yet. All right, so we very possibly could get a hook back up and finish wave 3 on the next hook up. And at that time, we should see bearish divergence more inside wave 3 and a lower owl. That would be a higher probability short trade than going in blind right now. Now, with that said, if this is a 3, then you'll probably have something like this. You'll have a move up. This owl during this movement up will get closer. And then C wave, if this is an A, B, C, C wave will turn this red. Okay. But so far, the pyramids have you long with a stop right here. So we're not exiting any long trades quite yet. Okay. So that's you know, how we use the art software along with the Elliott wave. So my suggestion is when you see a market and can, without thinking too much, see an impulsive wave, you're far better off than trying to figure out a wave count on a zigzagging market, because you'll have to go out to maybe a monthly time frame or a quarterly time frame to figure out where you are, okay, that type of thing. And when you go out that far, you're not talking about a short-term trade anymore. You're talking about really looking at a fairly long-term chart. And you may not want to be in that market for that long based on that analysis from the longer charts, okay? So hopefully that helps, okay? Really great stuff, okay? All right, Brian, what I would do is I would suggest calling TradeStation and get a hold of their tech and see what they can help you with on that.
Yeah, actually, I just talked to Brian,
Okay.
and he does a lot of strategies, and he's thinking he might switch to multi charts, but I think he's feeling that the issue is that TradeStation hasn't converted to 64-bit, so that's what he's thinking.
Oh, really? They don't have a
Yeah.
64 platform yet?
Nope.
Oh my God. You gotta be kidding me. Let me see here.
Yes.
Huh. I'm shocked that they don't have that yet. Doesn't state it here. I don't know what to tell you on that. All
He's
right,
been on the phone with them, and that's what they say.
good.
So
Okay, yeah, good idea. Talk to them about that. All right, let me just see here. So, all right, so let's take a look at IWM a minute, and then we'll wrap it up here. Art, this is for you. Okay, so on IWM, we have yellow PTFs. We have a move down, it looks into a fib zone. I'll tell you what I would do on this one. I would say, you see this high here? You got to move down. Let's take that out. If that gets taken out, that's pretty much a significant level for the entire year of 2023. If we take that out, that's really bullish. But I wouldn't go in before that in case it remains waffled for another few months in that, channel like it did here. So you probably are going to get a situation where you could get one more high because that's very impulsive. You had the retracement, but let it take that out, and then I would go long on that. Okay. Gotcha, Brian. Okay, interesting. I didn't even think about that. I just thought all platforms at this time were all 64-bit. I find that very interesting. Okay, good. All right, so that is it. Okay, so good session today. Great questions. Thank you. And again, we do these every week, and I try to put some type of educational content into this as well. But if I'm on a topic and you have a question unrelated that's bothering you, ask away. Okay, there's no bad question on this. All right, so excellent. All
and
right,
also
and
too,
Brian, come
Ben.
back next week and keep us advised of what you're doing with your platform and what's working best for you. Okay, I think that would be great. And also too, Lewis, if you wouldn't mind sending me an email on that workaround for folks to be able to access the free kinetic end of day data for NinjaTrader. All right, it's not like the legacy version where it just pops up. You gotta kind of find it, and it's not so easy to find. So awesome. All right, Art, good. Glad you got something out of this. Excellent. And thank you, everybody. All right, so I'll end here. Jeannie, I'll turn it back over to you in case there's anything else you want to add. But
You
we'll
betcha.
post this on YouTube in our private area by this afternoon. Thanks so much, everybody. Hopefully you're having a good new year, and we'll see you back here next week.
Excellent. And then also too, if you could all just let me know in the questions area, have you all been joining us on our YouTube channel? I just want to make sure that everybody's taking advantage of all the content that is there. We've got the Stock Analysis Fridays every Friday at 8 a.m. Pacific time. And that's live streaming, so you can participate. So give me a yes or a hello or a yes, I'm watching YouTube in the questions area, just to let me know if that has been helpful for you. Also too, the session that Ben does on Wednesdays, just before this one that he just did, we post the recording on YouTube as well. So everyone have a great day and a great week, and we'll see you here next time.